Hey, what's going on, my friends? In this video, we're going to take an updated look at our dividend portfolio where we are contributing $25 a week. And as you guys can see right now, we are currently up. Our current value is $1,425.33. Yes, we are killing it. And this is something that we started with $100 back on February 1st. Now, when we look at our full timeline and, as you can see over the past day, obviously it's Sunday. So over the past day, nothing was going on. Obviously the market's not open on Saturdays, but over the past week, our gains are $28.68 with a return of about 2%. Over the past month, that increases. Well, technically, technically that decreases. So our gains is $6.82 with a return of 0.50%. And then the past quarter, our gains are $23.40 with a return of 1.90%. And then 1 year or all time from February 1st, when we first started this with $100, our gain is $126.81 with a return of 14.81%. That's what I'm talking about. Hey, if you are just getting into investing or if you're thinking about it, why haven't you started yet? As you guys can see, this is a dividend portfolio where we started with only $100 back on February 1st, and we're already up to almost $1,500. Now, you guys probably see this beautiful chart, this graph going up, and notice this nice jump here, this nice spike. For any of you guys who are new to the channel, I'm sure everyone who's a regular, you guys already know the deal. That was our stimulus check. Now, we didn't put the whole thing in here, but we said, hey, our portfolio is up to $226 and it jumped up to about $734. Well, that was a $500 contribution that we added, that we put towards our dividend portfolio. We had our stimulus check come along and we said, you know what, we're going to put some of this towards bills. We're going to, splurge. We're going to treat ourselves. So, maybe you wasted it, and I won't say wasted, but maybe you treated yourself to a pair of Jordans or something, or Nikes. Or maybe you said, let's go out to a nice dinner. Let's get some seafood or something. I don't do seafood. I don't like seafood. But maybe that was you. Maybe that was your situation. And I'm sure most of you guys were probably just like, we balling out. Or you did the right thing and put it towards your bills. But another option would have been to put it towards your bills, and then anything left over could have gone towards your dividend portfolio. And that's what we did here. So we were being realistic. We didn't put the whole thing towards it, but we did want to put a small portion to show you guys when you come across, some sort of additional income, consider putting it towards your investments, towards your retirement, towards whatever, however you're using your dividend portfolio. That could have been a great opportunity with the stimulus check, or any other situations that happen to arise where you are getting some additional income, some additional cash flow that's not part of your normal kind of projected income. So if you say normally I'm getting $100 a week every week, well, and I'm only going to put $25 towards my retirement, well, you got $75 that's obviously going to go towards your bills and towards your, living expenses, your food, so on and so on. But if you happen to, maybe you got lucky and hit the lottery, maybe, a parent or, just money fell in your lap some other way. You got another side job, a new side hustle, whatever it is that's giving you some additional income. Don't go and just splurge. Don't go and just waste. I know, we've had this pandemic and, the lockdown, and people are anxious to get out and get back into the clubs and the nightlife and all that, this, that, and the other. I mean, enjoy yourself. Life is short. Have fun, but also be conscious and considerate of the future and how a small, change in your habits, which, I say small, but, of course, this is a pretty large thing to do, but you can start small where you're just contributing some of that extra money you're getting towards your retirement, towards your whatever financial goal that you might have. And in our case, we said, hey, we're going to throw it towards our dividend portfolio, which helped to speed up how quickly we got to the 1,000 mark and to where we currently are today. Because without that 500, we would be less than $1,000 right now. And this feels good knowing that, hey, we're almost at $1,500. We started this in February 1st and really just only adding $25 a week. And the beauty of this is that we set it on, you can get the kind of automation in play, in motion. So you don't have to do this on your own. You don't have to think about it. Once you get paid, your money goes into your checking account or savings account, wherever it goes, but you have your M1 Finance account connected to your personal account, and it just takes the money out on its own. You don't even notice it. That's the goal. And that's really, the position you want to be in, where it's just pulling this money out every week or every month. And you have no idea. You don't notice. Life is just, you're continuing to move forward with your regular life, right? You still might go out once a week. You might, do this. You might do that. Whatever it is, you are doing everything the same as you were before. But the only difference is you're actually chipping away towards that financial goal that you have. And so I'm a huge fan of M1 Finance, if you guys couldn't tell. I do have a link down below where you can sign up with them using my link. And, I think you might have to deposit $100 to get your account active and whatnot. But once you do, they right now, I believe, have a promotion of, it might be $50 still, but it may have gone down to $30. But either way, you're getting free money just to sign up and start to work towards building up your financial goals and retirement and whatnot. So that to me sounds, that's money. That's good stuff. And you definitely want to check that link out down below if you haven't yet. And there's also a link to Webull, which is another one of my favorite investing platforms that I use for trading and whatnot. This is their website. The charts, if you're actually trading and whatnot, look different than this. Not like this, but I like Webull as well. And I do have a link down below to Webull where you can sign up with them, open and fund your account, and also get some free stocks. So again, some freebies for you guys to get the ball rolling. You can see right here, open a brokerage account and get 2 free stocks. So different deals at different times. But I love Webull. I love M1 Finance. You guys definitely need to consider signing up with them if you haven't started investing yet. Even if you have, maybe you got a little money in Robinhood, well, maybe you consider one of these 2 platforms as well. And just wanted to show you guys NEWT, because I was talking to one of you guys after the last video, and you were saying, like, what happened with NEWT? Like, what is going on? And I had made that the last week's video, like right before they had commented and asked. But as you can see, NEWT has been our champ. When we come back and look and see who has the best return, you can see NEWT is killing it still. We were killing it and then took a huge hit like last week or the week before, and it's back up pretty much. It's working its way back up to kind of where it was. But it's at the top of our list of top performers and whatnot. Which is not a surprise because NEWT has just been killing it. When we jump back here and look at the chart from the past year, 1 year ago, it was down to about $20, $19. And we jumped on this in February, right? When we started our account. So either way, we're still clearly up still from when we got on somewhere in this range, or anywhere over here. But you can just see that huge just fall off, it's like a cliff. However, it's starting to go back up. So the question is, what is going on with NEWT? Well, we're going to jump into that really quickly, but before we do, if you haven't already liked this video, definitely like this video. It does help with the YouTube algorithm. So other people out there who are just starting off with investing will have a better chance to come across this video. And it also lets us know that you guys enjoy and appreciate this content. And after that, if you haven't already subscribed, hit that notification bell so then you can stay up to date on all of our latest video content. So looking at our list of companies over here, we got AT&T still just, still struggling a little bit after, the latest news and those business changes taking place over there. Anytime there's news about dividends being slashed, your investors aren't going to be happy when they are looking at you as a reliable dividend, company. So not good where we're seeing AT&T at the bottom. But on top of that, we got Verizon, and this has been kind of similar. We've been seeing both of them kind of at the bottom. We've been seeing these kind of four pretty much kind of at the top. NEWT, Realty Income, both of our REITs. Then we got Pepsi and Coca-Cola. And, pretty much all of those top four are around 20% and above for our returns. So really good there. Keeping things moving. We have Johnson & Johnson at about 15.75%. We have 3M at about 12.83%. Procter & Gamble at 12.37%. And then JP Morgan at 11%. So things are continuing to go well. Obviously, we are, I don't want to say killing it, but we killing it. We doing the damn thing. If we had our money in a savings account or a checking account, the percentage of our return would be more like this. I don't even think it would be like this for like any savings account. Maybe the first $1,000 or something like that. I have some accounts where I literally only have 1,500 in there. Or it's like my emergency savings account, just because of that 2% or 5% interest on the first $1,000. After that, it drops to 2%, 0.15%, nothing basically. So the point is, having your money invested in the market, especially when we know inflation is, this is where you want to be investing your money. Get your money to grow for you, because it's sitting in a savings account or a checking account. Beyond your emergency savings and your savings and cash that you need access to, that's beyond that, your money should be in the market with some reliable, good companies that are going to help you with growing your money. And now it doesn't have to be through dividends. Of course, you can just focus on, get Tesla, get Amazon, get Google. You can focus on some growth companies. It doesn't have to be dividends. But again, just consider not keeping your money only inside of a savings or checking account, so that, again, your money is going to start to grow for you. Now, I wanted to dive into NEWT specifically because of last week and that jump, that fall off, but we're seeing things rebounding. So what happened? What's the deal? What's going on? Well, first and foremost, latest news, we got NEWT surpasses Q2 earnings and revenue estimates. So NEWT came out with quarterly earnings of $1.20 per share, beating Zach's consensus estimate of 77 cents per share. This compares to earnings of $1.42 per share a year ago. These figures are adjusted for non-recurring items. This quarterly report represents an earnings surprise of 55.84%. A quarter ago, it was expected that this provider of financial and business services to small and medium-sized businesses would post earnings of $1.04 per share, when it actually produced earnings of $1.05, delivering a surprise of 0.96%. Over the last 4 quarters, the company has surpassed consensus EPS estimates 3 times. So, hey, that's good news, right? Right. As you can see, the stock climbs 5.9% in after-hours trading after the company boosts its Q3 dividend to 90 cents per share from its previous dividend of 70 cents after Q2 earnings exceed the average analyst estimate. Reaffirms 2021 annual dividend forecast range of $3 to $3.30 per share. And NEWT's business lending unit forecast closing and or funding 125 million to 150 million SBA 504 loans for full year 2021, representing an increase of 87.2 million in 2020. It's a NEWT Small Business Finance Unit forecast full year 2021 SBA 7A loan fundings of 550 million to 600 million, more than double the 198.6 million SBA 7A loans it funded in H1 2021. Wow. Now, currently NEWT forecast funding 50 million non-conforming conventional loans. What I wanted to kind of really draw your attention to, and this is where people were kind of jumping ship last week, was this news about them acquiring a national bank, to acquire a National Bank of New York City. And a lot of investors jumped ship and were kind of skeptical about this new model they're going to be potentially having to take and some of these changes, but ultimately what they believe that will do to the dividend, which some have said. I shared an article about this actually. Some said about a 40% cut. So yeah, that kind of helps explain why so many people jumped ship with that news, and certainly not something we're looking forward to, because after all, this is our dividend portfolio. Now, yeah, you can focus on growth as well, and you don't need to only rely on dividends as the only means of income. I mean, when we look at our portfolio, we'll see that majority of our gains are market gains, meaning it's based on the price of the actual stock, the share price, and not as much on our dividends, because that's less than $20. So, we're not gonna. You don't put all your eggs in that one basket for that reason, because obviously you can get your money to work for you. Many will argue a lot more than you can focus on growth than dividends. To each his own. And, I have a diversified portfolio. And so what I mean by that is this is not my only investment that I have. This is my only dividend portfolio that I have, but I have, I have one portfolio, for example, that has 2 or 3 companies that give dividends in that portfolio. Everything else are all, Tesla and Alphabet, which is Google's parent company. PayPal, or not PayPal. What am I talking about? A few other companies, but in terms of, Home Depot is in there, and Waste Management. Those are 2 other strong dividend companies that, Waste Management, we're pretty much going to always need someone to come and pick up our trash and, recycle and this, that, and the other. And that's Waste Management. I'm confident we're going to, they'll be around for years to come. Now, will there be, a competitor? Do they have a competitor? Of course. But for the time being, Waste Management is like killing it. So they've been one of my other go-tos in my other portfolio, and like I said, Home Depot as well. And so you certainly want to have a diversified portfolio. The thing I'm starting to consider adding and contributing more money towards is crypto. So getting some Bitcoin, getting some. I already have like 0.00001% of Bitcoin, and probably like a half of Ethereum, or maybe a third of an Ethereum. And these are investments that I made back in 2017. So like now, when it's funny, because I'll see people like going crazy with crypto and whatnot, and I'm not really fazed because I bought them so long ago, where anything it does now, and it's fluctuating up and down a bit, doesn't really faze me, because I bought so long ago when it was so much cheaper. Now the problem is I just didn't buy a lot. So yeah, we might be contributing a little bit more of our hard-earned income towards some little crypto, get some more crypto in the mix. But hey, that might be a video for another day. I did really want to just dive into not only give you guys an updated look at our portfolio, but also give you guys a little bit of an idea as to, what's going on with NEWT, because yeah, that fall was brutal, and it's good to see it starting to bounce back up. Like I said, the question is, how high will it go? Was this sell off, kind of, I don't want to say strategic, but a good opportunity, not intentionally done, strategic in that sense, but a good opportunity. Is this a good opportunity to buy? Or maybe this is the time that you might want to consider jumping ship. I have mixed feelings. I think their plans with acquiring a bank is going to change their business model, and how they run their organization and whatnot. But others think it's a good move. As you can see, as we can hear, it says that we believe our conversion to a bank holding company can potentially broaden our investor base to include more institutional stock ownership. Investors that invest in index funds comprised of companies included in indices such as the Russell and S&P, and investors that have been discouraged from investing in BDCs due to the acquired fund fees and expenses rule. So, hey, we're going to let this kind of play out a little bit and ride the wave to some extent, just like what we've been doing with AT&T. We know, people weren't happy. We aren't happy about dividend cuts coming from AT&T, and certainly wouldn't be don't want to lie and say I'm happy to hear some potential news about NEWT doing similar, but we can see that nice kind of bounce back that you're starting to see with NEWT, where it's starting to go back up. So like I said, if you were someone who's just buying stocks and whatnot, and this would be potentially a good opportunity to load up on NEWT, because it might continue to go back up and get back to those levels of where it was in the 30s. Or this might be the opportunity you want to have that you've been looking for, because it's starting to bounce back up. Maybe you want to jump ship now. You made a little curve, got a little more cash coming your way, and it's all right, let's get them out of the mix and get someone else in here, or just disperse that money among the current stocks that we have. We got options. Options are nice. What are we gonna do? I don't really know yet. I'm thinking I kind of want to just leave them in here for the time being, similar to AT&T. Again, there are tons of other companies out there that we could potentially swap and get in here and get them out. Really random. McCormick. I don't know if you guys know McCormick. I didn't know they had dividends, but it was a company, they remind me, they're like Campbell Soup, spices and stuff like that is what they make. And I don't know why, for some reason they keep popping in my head, and I'm like, McCormick, I gotta look into them more. Because that might be someone that's kind of under the radar, and it's not a popular company that people talk about and stuff. But they've been around for a long time, and we always gonna need our spices and whatnot and our seasoning. That's something that even during I'm sure during the pandemic, when everything else crashed, they may not have how do you even spell McCormick? It's McCormick, right? Yep. I'm how do you even spell their friggin' name? Ooh, they took a beating. Oh, no, it seemed like it from... they've fallen a bit. So this actually could be a kind of support in this range. This could be a strong support, so it might not really fall beneath this 80. Right now the lowest we're seeing from here and here, both of these are around 84, 83.64. Over here we look, it comes down to about 80. So this might be kind of the support around this 83 range right here, 83.64. And so it might kind of maintain where it's at here and kind of continue to go up moving forward. Yeah, so it actually might be a great time to buy. I mean, if I would have brought this up and we would have looked at it on 8.5. Sorry about that. But back on the 5th might have been the best time to jump on board, because that was right when it was at that 83.60 area. And like I said, it might only continue to go back up. I mean, obviously, it's probably going to consolidate still a bit more. That's kind of like what it looks like it's doing. But also, to some extent, if we look at it from 1 year, it's like, oof, like literally a year ago, right here. But it's like it's like a downhill trend this whole time. Is it on the verge of breaking that trend and going up? It might be right now. If we looked at this from the other Webull dashboard, I'd be able to draw some lines and indicators and whatnot, and kind of maybe see if we can make sense from indicators and the charts and whatnot. But I'm not too sure how the company's doing, if anything has happened. Yeah, McCormick stock rises Thursday, still underperforms market. These foods disappear from grocery stores. Yeah, so maybe we might get McCormick in the mix. Maybe we'll get someone else. I'm open to hear what you guys think, to hear your thoughts. Maybe we'll get an ETF here in the mix, or maybe we won't add McCormick, and maybe we're going to keep AT&T as well as NEWT and everyone else. What do you guys think? Feel free to leave a comment down below. Let me know. What do you think? Who should we swap in? Should we just keep rolling with what we got? Had we jumped ship on NEWT last week, or once it took that hit, that wouldn't have been good, because look where it's back up today. It's at the top of our list. Not too shabby. But all right, my friends, let me know what you guys think. Feel free to comment down below. If you haven't yet liked this video, subscribe to the channel, hit that notification bell so you can stay up to date on all of our latest videos. And yes, we will finally be getting back into the mix of putting out videos aside from every Sunday or Monday, giving you, our updated look here of our dividend portfolio. But we're going to get back into the mix of producing videos, helping you with making more money so that you can invest more, and managing your money so you actually are keeping more of your money and have a better understanding of where your money's going and how you can, again, hold on to more of your money. And lastly, growing your money. Of course, like I said, investing more, but there are other ways to grow your money aside from putting your $25 a week contribution in your dividend portfolio. Yes, there are other ways to grow your money, and we're going to be sharing those other ways and ideas and much, much more here on the channel. So yeah, we getting the ball rolling again. I'm excited to do so, because I've been getting a little antsy over here. But I'm a one-man band. Kind of. I was a one-man band. That was the problem, but that's why things are about to change. So on that note, I got to keep it moving, but much appreciation for watching. Like I said, feel free to comment down below and let me know what you guys think about the current portfolio, because we are up to almost 15% again. Yeah, not too bad. And hopefully your portfolio is looking similar, if not better than this. But all right, my friends, I got to keep it moving, but you guys already know. I'll see you in the next video. Peace.